afternoon, friends from the media. Um, I know we are running a little late. I guess that's because you had another meeting to attend. But thank you for making it here. Um, I will do a short introduction of the company, and then I will hand over to Suresh Ji Jhunjhunwala, the main promoter and who started this business venture. Uh, So just to introduce JG Chemicals, JG Chemicals Limited uh, is the largest zinc oxide producer in terms of production and makes various grades of zinc oxide, which are primarily used in industries such as the tire industry is the largest user of this zinc oxide. I think what is interesting and as lead managers from Keynote, what excited us about the transaction is this is a group which is conservative and has been established 4 decades back. And today it's a market leader in its field. And, it's fully supported now by the second generation. So I'll just take this opportunity to introduce the various people on the board and then I will request Suresh Ji Jhunjhunwala to say a few words about his journey. And post that, we can do a short presentation and take questions and answers. So, in the center is Suresh Ji Jhunjhunwala, the main promoter. Next to him, on his right hand side, is Anirudh Jhunjhunwala. And on his left side is Anuj Jhunjhunwala. And I also have on the board here my colleagues Yatin Singh from MK and Anupam Paliwal from Centrum. With this, I will request Suresh ji to say a few words about his journey and hopefully after that we can have a short presentation and question and answers. Thank you so much once again for being here.
Very good afternoon, ladies and gentlemen, members of the press, and also some of my friends from the financial community. I thank you all for taking time this afternoon to be here for the roadshow of JG Chemicals. I am, as introduced, I'm Suresh Jhunjhunwala. I'm chairman of JG Chemicals. I come from a business family which has been in industry for more than 100 years. And this is our fourth generation. So the continuity has been there and built on dependability, respectability, accountability, commitments, value. This is there. Our traditional family business was glassware. And that's where I started my career in 1970. And over the course of last 50 years, I've had the privilege of running various verticals, various businesses like glassware, mining, refractories, etc., engineering, sheet metal forming, electrical components, etc. I took over the zinc oxide business of our family. It was given over to me somewhere around 90s. And since then, by the grace of God and hard work of my team, we have been able to make it grow from a 500 metric ton per annum capacity to 60,000 metric ton annum capacity today. Our focus has been to be the lowest cost producer without compromising on quality standards and commitments. These two pillars have helped us grow into making JG the number one player in the Indian industry. We have always valued in my long journey and what I have been taught by my predecessors also, that the utmost value in a business is your commitment and your credibility. We have tried to uphold this in the journey of JG Chemicals also. I am happy to report to you that it has paid us rich dividends. Most of our customers are repeat customers, for life customers. We have grown with them, we have learned from them, and we are here what we are because of them. I won't come more between you and the presentation. I request Managing Director, Mr. Anirudh Jhunjhunwala, to please go ahead and make the presentation. If you have any questions, we are there for you. Thank you.
Thank you, Chairman, sir. It's indeed a pleasure for me this afternoon to be amongst all of you today. And as Vineet ji said, thank you all for sparing your time and making it here. I know there were several other press meets, etc., happening around the city, but thank you for being here. It's a pleasure for me this afternoon to showcase our company, JG Chemicals, in front of you, a company which has been built over decades. I joined the company in 2000, and I'm very happy to state in the last 20 years, with the hard work of everybody, today JG Chemicals is the largest producer of zinc oxide in India and also amongst the top 10 globally. The vision, the aim, the intent of our management, our company is to drive into the top five worldwide. Our customer satisfaction index, which we greatly value and measure annually, gives us a lot of joy when at the end of the year we see that our customers rate us extremely high and rate us as their preferred vendor. This is something, an asset which we don't find in our balance sheet. This is something, the asset which churns us immense return day in and day out. Our customers include the top nine out of the 10 global companies. As we envisage on this journey further ahead, our customers who have been supporting us all through carry with us this journey. And I'm sure that with all the hard work and the efforts put in by the team, we continue to serve their requirements. Our customers not only are from the tire business or for the rubber industry, we have leaders who represent from the field of pharmaceuticals, cosmetics, oral healthcare, and many more segments. Today, JGC is a well known brand, is a well known company worldwide. In the international markets, we sell our zinc oxide, we buy our raw materials. Our global footprints are very strong and deep rooted. While doing all this and more, as management, our endeavor is always to make sure that our stakeholders get the required returns and we maintain our financial performance. Our numbers historically have, in terms of ROCE or ROE, have all been north of 20%. In order to dwell more deeply into the presentation, I will request our CFO, Mr. Anuj Jhunjhunwala, to take you through the entire presentation. And if you have any questions at the end of the presentation, we will have a Q&A on this. Thank you.
Thank you, everybody, for coming here today. I'll not take too much of time and I'll start off with the presentation now. So I think Managing Director Anirudh Jhunjhunwala has given you a quick overview on some of these aspects here. A couple of things which I want to highlight here is that today, zinc oxide is a product which is not a plain vanilla product. We are making almost 80 plus grades to cater to various customers. So if you talk about the tire industry, not necessarily every tire customer would have the same specification. All tire customers, in fact, have different tire specifications for zinc oxide. All paint guys have different ones. All ceramic guys have different ones. Animal feed guys have different ones. So the ability to produce so many different grades, that's the complex chemistry which is there in our business. That's something which the company has been able to master over the last, 3, 4 decades. And we do that using majority of zinc scrap. So the ability to recycle scrap, the ability to, attain the sustainability goals of the country, of the customers, and of our company. I'm very happy to state that we are the only zinc oxide company today to have the IATF certification. IATF is a very important certification to cater to the automobile industry. Our sales today is about 75 to 80% into the tire industry. We also amongst the very few companies globally to have the GMP certification for making pharmaceutical grade zinc oxide. Our material subsidiary BDG Oxides got this a few months ago, and this has opened up a very niche and very exclusive customer segment. Some of it is import substitution as well. And obviously, these are markets where the competition is limited. So obviously, the realizations, the margins, etc., are also better. Just to give you a quick overview of the product, zinc oxide is like talcum powder. If you look at it, it's like a white powder. There are three different ways to make it: French process, direct process, and wet chemical process. French is the most popular technology globally. It has the best quality, and that's why about maybe 90% of the people globally use this technology. The other two processes, they have different feedstocks and they have limited customer applications as well. Our main raw materials, I'm going to dwell on that in more detail later, is zinc metal and zinc dross. Now, what are our strengths today? As a company, we've been able to grow, and that's because of a few, different pillars which have come up in our business. One is there are very, very high entry barriers to the business, whether it's in terms of customers or whether it's in terms of sourcing. So having a good customer mix, having a customer base which is consistently taking material from you, having a good supplier base, both are critical. And obviously, technology also plays a key role because as I mentioned, we are recycling scrap. What are the various because scrap doesn't come in one shape, size, or form. All, whichever galvanizer we are buying from gives us different qualities and different grades of scrap. The ability to process that and make the right product out of that without compromising on your quality or the yields, this is one of the biggest strengths that we have as a company. And obviously, as our chairman said, financial prudence and capital allocation is be one of the key facets of our business and as a family as well. Hi. Managing Director touched upon this part on, what are the various applications of zinc oxide. So we've just put up a short pie chart on the various application segments that we cater to and what's our revenue mix. But the most interesting thing to note here is that, unlike India, which is, if you talk about the globe, about 50% of zinc oxide is used in non-rubber application. So whether it's ceramics, cosmetics, pharmaceutical, and a whole host of other applications. Our revenue segmentation has historically been tires, rubber, and a whole host of other segments, which is just 10%. We've been very, very low on the ceramics industry because we don't have a presence in Gujarat, which is the main hub of ceramic manufacturing. And one of the, strategic initiatives that the company is taking now is to put up a unit in Gujarat in the next 4 to 5 quarters. Now, when we talk about customer and how the business works, so today 80% of our business, 75% of our business is tires, and to get into a tire customer is a very, very long drawn process. Our average approval takes 5 to 7 years, and most of the tire companies are now very reluctant to have a whole crowd of vendors. Today, all the Indian tire companies are also catering to foreign automobile companies. So their quality systems, their standards, etc., have evolved in the last couple of decades, in the last 10 years. So that's why the tire companies also want to work with a few people who have the ability to scale up, who have the required quality assurance systems in place, who have the necessary infrastructure in place. These are various things which has led to the tire companies being dependent on lesser number of vendors vis-a-vis what was there 15, 16 years back. And now today, tire companies don't want to work with vendors who are very small. So consolidation is a key facet of our business. Consolidation may not happen by way of M&A only, like it happens in very large industries. Consolidation in our industry would be by the way of very small producers gradually losing market share, and that market share generally gets shifted to organized players, of which we are one of them. And as I mentioned, we have all the requisite approvals in place for the pharmaceutical sector, whether it's the Indian pharma, British pharma, European pharma, or US pharma, and also the GMP. But I guess skip this. Now, coming back to the raw material sourcing. So today you see, we are basically buying zinc scrap from the galvanizers. Now, these galvanizers in India are the large steel mills, and we source about 35 odd percent of our raw material from India, which is fairly simple. But the trick lies in having a global and diverse supply chain. Today, about 65% of the material that we're buying is from foreign countries: North America, Europe, Southeast Asia, West Asia, Middle East, Africa. In these regions, we don't have direct tie-ups with the galvanizers. So there are family-owned trading houses who are present in these regions. They act as aggregators. They collect the scraps in their region and they sell it to people like us. Now, these guys, they are family-owned companies. They want what do they want from their customer, which is us? Predictability in terms of offtakes and payment safety. As a business family, we've been very, very focused on ethics and values. And no matter what crisis the world has seen, whether it was a financial crisis or the latest COVID crisis, we honored each and every commitment. What this has helped us do is to become probably the preferred customer for my suppliers. This, along with the scale that we operate in, gives us a wide bouquet of zinc scrap to process. So, as I mentioned, all customers have different specifications. So, the ability to process various grades of scrap, which we're able to source from various regions, this is something which comes with scale. This is something which comes with R&D. This is something which comes with experience. So, that's why this is not a business where we've seen new entrants really come up in the last decade and a half. And one more aspect which I would like to highlight here, sourcing is a very, very important aspect in our business because in the past there have been instances in which many smaller producers have had supply chain constraint because of which they've had to curtail production. This is where we as a company step in because we maintain sufficient inventory. Obviously, there are costs of cost to keeping that inventory in your stock, but we do that because we're able to rise up to the demand when the customer needs us. And demand from customers is very, very sticky in our industry. So, as you've seen, FY20, our capacity for zinc chemicals was about 38,800. Today, for zinc chemicals, it's about 70,000, which includes zinc oxide as well as zinc sulfate. Zinc sulfate is a product that we started year and a half back or so in our Naidupeta plant to cater to the agriculture segment. And we as a company believe that our business is not very, very large capital intensive business. It requires a huge amount of working capital, which is different. So we always believe in having regular capacity additions in our plants because when we're catering to the tire industry, it's not, tire industry demands come in large quantities when there's a reset, when a new customer puts up a new plant. So the demand goes up substantially. So we're very happy operating at, the utilization rates where we are in the mid 60s or so. And obviously the current utilization rate would show 52% because the plant just got commissioned less than a year ago. So these are reasons why we expect that the capacity utilization in this plant would also go up going forward. I'll quickly introduce our board. Apart from the three of us who are present here, we have Mr. Ashok Bhandari, who's the ex-CFO of Sri Cement, Mr. Nag, who's a very senior gentleman in care ratings, and Ms. Savita Agarwal. Now, I think everyone, the talk of the town today is about sustainability, green, and all of these things. So where does JG Chemicals fit in the entire basket? Every tire company today is talking about sustainable tires. What do you mean by sustainable tires? A sustainable tire is basically a tire which is made from raw materials which are made using using scrap. So today we are very confident and very happy to state that almost 95% of the oxide that we make is from scrap. So from a sustainability perspective, we score well. And there are certain products, without getting into names, which run the threat of reduction in usage in the tire industry because of green norms. We as a company are fairly well insulated from that today. So what's our strategy going ahead and how are we going to grow? As we mentioned, ceramics is one of the biggest consumption sectors for zinc oxide outside the rubber industry. And Gujarat is the hub of ceramic manufacturing in India. And now in the last few years, we've seen that, the ceramic sector is also evolving. Post the GST regime, the unorganized to organized shift, and, Indian companies getting world class. The ceramic companies are also becoming quality conscious. So we are now putting up a unit in Gujarat in the next 4 to 5 quarters. It will be up and running, and that will cater to the ceramic segment. Plus, a lot of our tire customers have also put up factories there. We expect to cater to them in those regions and also other industries like specialty chemicals, etc., which are present in there. The other area where we are very confident of achieving growth is Southeast Asia. So if you remove India and China out of the Asia map, the largest tire production happens in Southeast Asia. Why? Natural rubber availability, low cost of labor, and good port connectivity. So we've been catering to the Southeast Asian market for maybe a decade and a half now, and we've forged very, very deep relationships with the tire companies which operate there. Some of them are global names, of which we all know of. Some of them are local names in those regions. We've developed relationships with them, and now we want to be close to them. So our business is about being close to the customer. So we'll soon be there, whether it will be through an acquisition or whether it will be through a greenfield. We'll let the required people know in due time. The other product, as I mentioned, is zinc sulfate, which we started off. We put up this unit in South India because South India has the highest deficiency of zinc in the soil. And the main raw material to make zinc sulfate is zinc ash, which is a byproduct out of the zinc oxide business. Plus, we have many customers who are using our zinc oxide who also require zinc sulfate. So there's an opportunity to cross sell we have sourcing advantages, we have locational advantages in terms of the end market that we cater to. What it also does is open a B2C segment for us. Currently, we are a B2B business. We are also selling a small percentage of our zinc sulfate in the B2C market today. Second, this opens up a new avenue to the zinc micronutrient market today for us. Whether it's zinc EDTA, whether it's 39.5% solution, these are products which we intend to go for, get into in the next few years. We're also looking at developing a specialized activated zinc oxide to cater to the electronic segment and certain niche applications. Various government schemes have led to the increase of my end user customers in those segments. And obviously, the pharmaceutical business I've already touched upon. Now, if we talk about the overall industry size, so globally, the zinc oxide industry is about 1.5, 1.6 million tons or so. And when you look at the North American market or the European market, they are very, very consolidated markets. There are not that many players today. In India, unfortunately, it's a very crowded market. We are the largest with a capacity of 60,000 tons. Then there are two guys who are significantly smaller than us. And there's some other guys who are about 10, 15% our size. And then there are many smaller guys. So we expect that the unorganized to organized shift, the consolidation, these things will help us grow. And overall, we see that all the end user segments that we have for our zinc oxide business is also growing. So these are the top 10 tire companies globally on the left and the top 11 tire companies in India. I'm very happy to state that out of the 10, we are approved with 9 of the global ones. And out of the top 11 in India, we approved with all 11 of them. So this is a very, it's one of the biggest barriers to entry because this is what you see on a slide is just 10 names, but this is 15, 20 years of work. Now, obviously, the market believes that auto industry is a very cyclical industry. I mean, that's the word on the street. But this is the way we've performed. In a period when the tire production barely grew by 2%, volume terms, our volume CAGR has been 13.32%. Now, the next question would be why and how. I touched upon the aspect of consolidation and unorganized to organize, how the larger tire companies are increasing their share of business with us. Secondly, there are newer application areas which are coming out, whether it's the agriculture segment, where the Indian farmer needs more zinc, whether it's the sunscreens, whether it's the paints, whether it's the batteries, whether it's the animal nutrition products. These are areas. Third, regular capacity expansion. This is very, very important. This, coupled with good service and being close to the customer, has helped us grow. Now, if you look at, if you take a broader macro view of the inputs to the tire industry, there are a whole host of inputs. Most of those inputs that you would see, apart from zinc oxide, you would see many of those industries are very, very consolidated industries with 4, 5, or 6, 7 players only. Our business, in our industry, there are lots of players. So there's a genuine scope for consolidation, which is obviously started and which will continue, we feel, going forward till the industry has a limited number of players. Zinc sulfate, I've already touched upon. I'll just give you some stats. The market size is about 2 lakh tons today, and we put up a capacity of about 10,000 tons in South India on this. So these are our rough numbers for the last 3 years and the current 9 months period. So as you see, between 21 and 22, we've been able to significantly grow our revenues, and the ROEs and the ROCs have been well in line with what they were. I mean, above the 20%. Now, just to quickly summarize on the IPO size, the primary issue is about 165 crores, and of which the material subsidiary, which is BDG Oxides, will repay about 25 crores of its existing debt. We are putting up an R&D center to develop various grades of zinc oxide, other chemicals, other products which we want to get into. And obviously, there would be working capital financing for the parent as well as the subsidiary. Ma'am, I think I would leave the floor to for any questions if you guys have.
Yes, please. Yeah, yes, please.
So, what is the maximum capacity utilization that you can achieve at your current facilities?
As far as current facilities are concerned, the installed capacity for zinc oxide is roughly about 60,000 tons. On a conservative basis, because we manufacture so many different types of grade, you can operate the plant at roughly about 80% capacity. So that's the operational capacity which is possible when you're manufacturing all the grades that we do.
Will you be augmenting it?
Yes, as and when historically, if you see our journey, every time we hit our capacity utilizations to between 75 to 80%, we embark on the next phase of capital expansion, of plant expansion. As our CFO just mentioned, we do not look to do very big expansions at one go, although our balance sheet allows us to do that, but we are very judicious in our capital allocations. We believe in slow and steady expansion of capacities. The moment we come back to about 80% close to that, we will do the next round of expansion. Having said that, there is already a plan, as we mentioned, to set up a capacity in Gujarat to cater to a different geography and a different user segment, which is mainly the ceramics coupled with other tire manufacturers also. And also, we are planning to do something in Southeast Asia, which was also outlined. So apart from that, in our existing capacities, as and when we reach that figure, we will look for the next expansions on an overall company basis.
Thank you, sir. What was your market share in the last FY and will it be in the first half this year?
So our market share, which has been also outlined by the CARE report, is roughly about 30% market share we hold. And we believe that even in the current year, we should be close to that market share itself.
Yeah. Hello, sir. This 30% market share, you said is it go globally or in Indian market?
No, we're talking about the Indian context.
Okay. Well, how is the global?
So as the CFO just mentioned, the global market is about 1.5 million ton, and the Indian market is about 1,20,000-30,000 tons. So we are 30% of the Indian market. So if you do the maths on a global scale, we become close to say about 2% or 3% of the global market.
And what is the portion of exports in your top line or revenue?
So roughly we export something below 15%, between 10 and 15% is our exports. And having said that, one of the strategies that we outlined is that we have a lot of approvals with global customers. For example, a global customer may have a plant in India, may have a plant in, say, Thailand, or may have a plant in some other country in Southeast Asia. But because of the fact that we are not located at an overseas location today, our wallet share with those customers is very small. As and when we pursue our expansion plans in Southeast Asia, we believe there will be an opportunity to increase that wallet share, however, not from our Indian plants, but from our overseas plant.
I guess this issue is the 100% fresh issue and no proper sale is in.
Anuj,
Yeah. And how much shareholding of the promoters will be get time?
So the issue size is about 165 crores of primary and about 86 crores or so of OFS. To the promoter holding post the issue would be about 71%.
Today it is 100%.
Today it is 100%.
Hello, this is Vinit from Bright News. I wanted to ask that BDJ oxides contributes close to 60% of your total revenue. And why is it set up as a subsidiary and not combined with GJC?
So BDG Oxides was set up as a subsidiary due to strategic reasons. Currently, GG Chemicals holds about 96% stake in BDG Oxides, 95 or 96% stake. One of the objects of the issue, as you may have seen, is to finance certain expansion plans and capital requirements of the subsidiary. As and when the capital is infused from the parent company into the subsidiary, the stake of stake of JG Chemicals in BDG Oxides would be increased. And we assure you that the price at which these capital increase would be done in BGG oxide would be at the best possible interest of the minority shareholders of JG Chemicals
And
within the realm of the Indian law.
one more question is that what will be the receivables and inventory days going forward from here?
So I think the inventory days that we have achieved in the past is in line with what we expect to achieve in the future. We do not want to give a wrong guidance that we will be able to significantly reduce it. I think where we are currently operating is more or less in line with our historical numbers, and we expect that that is the norm in the industry if you want to be an important and sizable player for your customers. Secondly, your question was on the receivables. I think on the receivables part also, our terms of payment with our customers is in line with market standards, and I don't foresee any major reduction in that.
More questions, then we can.
If any more questions, please raise your hand now. If not, then we'll go for a vote of thanks. So thanks a lot, the management team, for taking us through this presentation, as well as highlighting the growth potential and the key strengths, as well as strategies of JG Chemicals. Also, thank you for explaining and taking us through the journey the company has had and the position that it has achieved, as well as in terms of the future, the way forward. Given the company's leading positioning in the zinc oxide manufacturing sector and its expansion plans, we hope that this issue will see a blockbuster response from all categories of investors. I would like to thank all of you for attending this meet and sharing your thoughts with us, as well as asking the relevant questions. We look forward to your support for making this issue a huge success. Just to summarize on the issue, the IPO consists of fresh issue of about 74.66 lakh equity shares, aggregating to 165 crores, as well as 39 lakh equity shares aggregating, that is the secondary part of the issue, aggregating to about 86.2 crores at the upper end of the price band. The price band is rupees 210 to rupees 221 per equity share, which has a face value of rupees 10 each. The offer would constitute 29.01% of our post-offer paid up equity share capital. So the promoter stake residual will be about 71 odd percentage. The IPO opens for subscription on March 5th, 2024 and closes on March 7th, 2022. So thank you again for joining us here, and have a great day ahead. Thank you.